Hey folks, welcome back to Real Estate Investing Unmasked. Today we're going to talk about what documents you need to keep when you either buy or sell a house. When it comes to buying or selling a house in the United States, there is one main document you need to keep, and that is the HUD-1 statement. When you're buying a house, why do you keep this statement? Because when you tell the IRS that you bought a property, this is going to have a lot of charges that you paid, whether or not you paid the closing costs or the seller paid the closing costs. So as a buyer, you want to hold on to it. It also sets the baseline for when you bought the property and what your value was when you bought the property. For those who are selling the property, the HUD-1 is also equally important, because if you paid those closing costs, you also may have some things on your taxes that you can write off. The other thing you need to do is be able to show when you bought the house and when you sold the house, and in between you may have paid for some home improvements. And those home improvements, depending on your tax bracket, those may come in handy for being able to write off some of the income on those properties. Say for instance you bought this property, you lived in it for 2 out of the last 5 years, and you've sold it now, and you made between $250,000 and $500,000. If you were single, then that $250,000 would be free, tax-free money for you. Why a lot of people invest in real estate. If you're married, filing jointly, and it's up to $500,000, that first $500,000 is tax-free to you. Now those are depending on your tax brackets, but for the most part, that's going to hit almost everybody that's selling or buying a property that is their primary residence they've used for 2 out of the last 5 years. So you want to keep that HUD statement. You want to keep any improvements that you did, especially major improvements you did on the property, and keep those records safe. When it comes to your taxes, the HUD-1 is going to be important. When you buy the property or sell the property, make sure you keep that HUD-1 statement. And one of the best things you can do if you have somebody who does taxes for you is go ahead and send it to them right away so that they have it for the next year. Again, that gives them that baseline. It lets them know what's going on. They got the number ready to go. So when you apply to have your taxes done, they've already got that one document. It's much easier to do it that way than to go digging for it next year when it's time to do their taxes 7, 8, 10 months later. I promise you, it is much easier to go and give it to your tax person first than to go looking for it later on. So guys, I hope that helped. Hold on to that HUD-1 statement, hold on to the costs of fixing up places, estimates that people gave you, compare that to your bank statements of what you paid to fix up property, and that should help you out. If you have any questions, feel free to ask in the comments down below. You can reach out to me at my website at www.watchbobonyoutube.com, and I'll see you next time. Thanks for watching.